Well, you got to be flipping my flapjack straight onto the floor. Look at this, folks. We have stocks collapsing and crashing all over this market right now. I'm about to take you through exactly what's going on here. We're going to talk about the Three Amigos in today's video. If you've never heard of the Three Amigos, you're going to be welcomed into the world of the Three Amigos here today, okay? And you're going to basically find out why this market is dropping so substantially right now. We're going to go through that, and we're going to talk about how long that's going to last, okay? Now, before we get into all this in today's video, which I prepped quite a bit for you guys here today, while I have everybody's undivided attention, get your money right. If your money's not right, meaning more income than expenses, you need to get there ASAP, okay? And I mean ASAP, because you've got certain opportunities in front of yourself over this next, I would say, few months here to take advantage of some pretty extraordinary opportunities to buy some insurance for your portfolio, and you want to make sure you're able to do that. Ask the people that were not able to take advantage of those deals last year, you know, how much they regret that. When Meta fell under $100, when Tesla fell to $100, when you had stocks like Shopify fall to $25, Netflix stock fell to less than $200 last year. I mean, it was a platter of deals everywhere, and the folks that had more income than expenses were able to take advantage of those deals, and the folks that don't were not able to take advantage of those. So if you do not have your money right, get on that ASAP. You shouldn't even be watching this video. Like, go get your money right. Go figure out something, okay? Because if you can't take advantage of these opportunities, then it's all a waste in the end, okay? You've got to make sure you're able to take advantage of these opportunities, all right? All right, appreciate everybody joining me as always. Thanks so much for being subscribed, folks. A lot to get into in this one here today, okay? So, starting out right off the bat here, I mean, just a lot of pain in some of these stocks, right? The Planet's down huge today, no reason for that. Palantir's down huge today, no reason for that 7.7% move down. Elf on a Shelf, one of the greatest stocks literally in the stock market the past 5 years. I'm a proud shareholder of that company, and it's been absolutely magical. Heck, it might be the best stock in the stock market the last 5 years, to be quite frank. Elf gotten hammered today, and there's no reason for the stock to get hammered like this, 7.5%, which is just shows you, like, man, they're just selling everything. I mean, this is as quality gets. It's as good as it gets, and for that stock to sell off 7.5% here today, oh boy, okay. Fubo down 5.5% here today, and then you got Shopify with a 4% downward move. Look at Palantir in the past 2 weeks, folks. It's a 30% mover down in 2 weeks. You got to be flipping my flapjacks, folks, okay? Listen. When you see moves like this, okay, when you see moves like this, just know you better have your money right. Because I'm telling you, these sorts of moves down do not happen very often. When you're going to see stocks going down 20, 30, 40, 50%, you know, that rarely happens, okay? Especially for great balance sheet companies like a Palantir and that is now profitable, that very, very rarely happens, all right? You know, you look at a stock like Fubo, 30% move down here just in the past month. And this is just complete, like, I don't want to take risk in this market at all, right? To sell off a stock like Fubo like that, right? And this is meanwhile, Fubo is about to see their Google Trends data go absolutely to the moon, and they're about to just, I mean, tear it up in terms of new subscribers on their platform. They've done an amazing job keeping those subscribers because we're about to go into football season. Literally, we got preseason football starting now at this point in time. College football starts next weekend, so not this weekend, but next weekend. And then you got NFL kickoff happening in early September. Oh my gosh, Fubo is about to tear it up on the Google Trends data. They're about to attract so many subscribers, but none of that matters right now to the stock market. The stock market doesn't care about what's going on or football season or how many new customers you're going to attract or what your revenues are going to be or profitability. None of that stuff matters right now. All that matters right now is sell. Right? You look at a stock like Shopify. This stock has been hammered. It's almost lost a quarter of its value in the past month. For Shopify, right? When you see a stock like Shopify, and I think Shopify is a great stock to add to your watch list, even if you have no plans to own Shopify, if it's not a stock you want to own, right? It is a stock I own. I own it in my Patreon portfolio. It's done me absolutely tremendous, right? The past month has not been so good, but the gains on that stock have been pretty dang good. When you see a stock like this sell off, just know the market wants no part of risk. Shopify is a great risk on stock. If the market wants to take risk, Shopify is going to see huge appreciation, right? If the stock market says, I want no piece of risk right now, Shopify is going to sell off. And that's exactly what we've seen from that stock. And it doesn't matter what your numbers are. When you're in a risk-off market, it doesn't matter what your numbers are. It doesn't matter anything. All that matters is sell, right? Same thing in risk on markets, by the way. Numbers don't matter. Valuation doesn't matter. People just say buy, 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 right? That's all that matters. No, Meta in the past 2 weeks has been a sneaky, also big downward mover. Meta's fallen over 10%, coming off of shockingly great numbers and shockingly great guidance. And yet, does it all matter? No. Meta's trading disgustingly undervalued right now. I went through my ultra bear case, base case, bull case, and ultra bullish case last night. All my projections for Meta stock inside the private group. And I can just tell you, I love Meta. I freaking love Meta. But the past 2 weeks have not been pretty for the stock, right? If you're not a shareholder of Meta, I mean, every dip is just a blessing. That's all I can say about that. If this is not a position you have built out. But yeah, 10% mover in 2 weeks. That's huge. This is one of the biggest companies in the world. 10% in 2 weeks is huge, right? PayPal's been just decimated to rate 20% in the past month. Oh my gosh, give me free money. This is free money. Thank you for the free money. Tesla, my Tesla. Oh my gosh. Okay. Tesla down almost 23% in the past month, folks. Once again, if you don't want to own Tesla, it's fine, but you should add it to your watch list. This is going to tell you if the market wants to take risk or not. And right now, market wants no piece of Tesla, my Tesla, no piece of risk like that, right? They say, we don't care what you got going on. We don't care about Cybertruck. We don't care about any of that. We just know we don't want you right now. And that's the story for Tesla. And, obviously Tesla's the second biggest position. I mean, Meta is the biggest position in the public account. Tesla's the second biggest position. These stocks have done me tremendous this year up until really the past few weeks. And, the past few weeks have definitely been a dropper. Apple, usually seen as one of the safest stocks in the stock market, one of the least volatile stocks in the stock market, is down 11% in 2 weeks, folks. 11% in 2 weeks? That's a no joke as holy smokers. Yeah, for a stock like Apple to make that move, Tesla in 2 weeks, okay, you can kind of understand it. You're like, Tesla's super volatile. It's always moving around. Apple? Something bigger going on there. That's all I'll say about that. Something bigger, right? But just be glad you don't own Hawaiian Electric, because my gosh, Hawaiian Electric in the past 5 trading days is down 66%, folks. 66%. Oh my gosh, okay. Whew, that's vicious, right? Now, if you watched my videos last month in July, I preached in video after video after video after video. Hedge, maybe consider some hedging, the amount of times I mentioned that last month was ridiculous, right? And the reason I kept mentioning it, bringing it up again and again and again, was we had such a hot market for obviously the first half of the year, and puts were extremely cheap. So if you wanted to buy a little insurance for your portfolio, right, it was a very cheap time to do so. Some people took that serious. Some people, I don't know. It seems like I might have to spend 2 hours learning how to hedge. Oh my gosh, that might be too much time for me, or something like that, right? And here we are in a situation where now these stocks are starting to sink 10, 20, 30%, some even more than 30% in a very quick amount of time. And people are looking out there and they're like, is this going to end soon? Because I'm getting tore up, right? That's the scary part. All of a sudden you see your stocks falling 10, 20, 30+%. And you're wondering, is this going to turn around soon? What if this continues on for another month, several months? Oh boy. And you're not hedged? You don't have some insurance on your portfolio? Like I tell you guys all the time, especially last month, a little hedging done properly can go a long flipping flapjacking way. A little hedging goes a long way for portfolio insurance, right? And, just a few that I took advantage of in the past few weeks is some Apple, right? Just a little Apple hedge here. This is paid $6,600 for this insurance. It's basically the way I look at it. It's insurance for my portfolio. And in a very quick amount of time, it's now worth $9,500, right? These Apple puts here, just a little insurance, just in case things went bad. We're already up 57% on those. I mean, Apple's down 11%. It's not like it's down 20, 30%. Imagine if Apple goes down 20, 30% over this next few weeks. Do you know what type of gains these are going to be sitting on, right? Look at this one. This is a $190 put that expires in March, right? Just a little hedge, just a little insurance in case things went bad, right? And there we are, sitting at 109% gain already. And in the Patreon portfolio, right? And this might not seem like a big dollar amount, but keep in mind the Patreon portfolio is a little over $5,000. So $300 out of $5,000 is actually a pretty big amount. I put on this hedge a few weeks ago, right, for some Polaris puts, and, a 33% gain pretty darn quickly. A little hedging done properly goes a long way in this market, okay? A long way. And all it is just insurance for your portfolio, especially if you got bigger portfolios. There's a lot of people that watch, and I understand if you're a newer investor and you got $3,000 in your portfolio, right? The hedging, it just doesn't probably make sense at this point in time, right? You can learn that over the next few years. But for the people, and there's a lot of you guys that are watching this video right now that have 6 figures in your portfolio, 7 figures, and 8 figures in your portfolio, okay? There's a lot of you guys. I know. We've sent out a lot of those damn trophies over the years. I can tell you that inside the private group. It's ridiculous how many of you guys have 6, 7 figures and multi-7 figures and 8 figures in your portfolios. For you guys, okay, you have a lot to lose. You have a lot to lose if you do not have insurance, if you do not hedge properly in your portfolio. In markets like we're in right now, these are the sorts of markets you want to make sure you have proper hedges on as insurance. It's no different than having homeowners insurance, renters insurance, auto insurance, right? Imagine, for you guys that have a lot of money, you're basically driving a Rolls Royce around, okay? So you got your Rolls Royce Ghost 2 driving around, and imagine not having auto insurance. It's a fucking scary thing, man. It's like, oh my gosh, if somebody hits me, I'm screwed. If I hit somebody, I'm screwed. Like, I have no auto insurance. Imagine you have the big house, okay? You got the big house, and you got no home insurance, right? You got no property protection if something happens to your house. Like, that's damn scary. That's freaking scary, man. The more you have to lose. And the more you have to consider taking insurance serious, right? So, these are just things to kind of keep in mind here, folks, okay? We got a lot of landmines in this market. We're about to get into the Three Amigos here that are kind of shorter term things, but we also got things that are going on longer term here that are problems, okay? Landmines out there. And, if you got a lot of money in this market and you're not properly hedged, like, you're just setting yourself up for scary situations, right? There's a big difference between hedging properly and saying you got to go all short the market or sell out of your stocks. No one wants to sell out all their stocks. That's a crazy idea, right? That's, we know a lot of people, even some big YouTubers that have tried to play that whole game of like, oh, I'm going to sell out all my portfolio and then I'm going to try to buy back in. It doesn't work. Few hedges? Oh boy, they go a long dang way, right? A long way. Imagine you were hedged going into 2022. Oh my gosh. The money that could have been made. Oh my. I mean, you saw those stocks falling 40, 50, 60, 70%. Imagine at the end of 21, you're like, let me just buy 10, 20, 30K of hedges. I mean, that would have been worth hundreds of thousands of dollars easily in 2022. And you make that money, you take those profits in less than a year. And it was all for just insurance on your portfolio. I mean, that's the most beautiful thing, okay? So, by the way, if you don't know different hedges and strategies and things like that, apply for my private group. I got videos in there going over different hedging strategies, how I hedge, things like that, because I'm telling you, if you don't do that, pick up a book, go read about it, learn about it, because I'm telling you, take this stuff serious, okay? All right, let's talk about the Three Amigos. Let's talk about how long these are going to last, okay? So the Three Amigos. The first Amigo that we have working, and this is really, really scary right now, is a 30 years taking off like a rocket ship. Now, this is a massive move. This is a 1 month for the 30-year treasury. This is a massive move. You don't usually see the 30-year make a move that big, that quick. This is huge, okay? Now, the reason this is so scary is you learn in Finance 101, right, about treasuries and how these bonds work and things like that, right? And basically, when yields rise, this signals a drop in demand for treasuries because investors are bullish about the economy and seek higher returns elsewhere. So that's what you would be taught in like a basic finance class in college, right? And it kind of makes sense, like, okay, people basically moving money out of treasuries, moving money into stocks. But this is where we have a problem. That doesn't add up. Because if this was a situation, right, if over the past month, everybody was getting out of 30-year treasuries and they were piling their money into stocks, right, which is what you would learn in Finance 101, right? Well, then we would see all these stocks going up 10, 20, 30, 40, 50% very quickly versus what's happening with these stocks where they're dropping 10, 20, 30% very quickly here, okay? So what's going on here is something bigger beneath the surface that's a lot scarier. If that money had just moved straight into stocks, like, we'd be feeling pretty dang good right now, right? But it hasn't. So that likely means we could have a liquidity problem where there's just not enough money to go around right now, right? That's scary, because if you're talking about a liquidity problem and you're talking about this 30-year continues to spike, we could be looking at bigger systemic banking problems that we don't see today, but that will come to light sooner rather than later, which adds a new scary element out there in general, right? Which also adds a scary element to potential credit contraction. If we have real credit contraction, right, well, that could hit the economy in a major way, right? And then when we talk about those Fed lags, I've been warning you guys about the Fed lags, they're likely going to kick in 24. There's a potential they don't kick in until 25, but, usually it's a 1 to 3 year game. It's 2 years. We're going to be in 2 years in 2024. So you usually like to play what the average is. So the average would be 24 kicks in and it starts to kick in a major way. And if that happens, you put these pieces of puzzle together and this is a problem. Now the scary part of this, amigo, is this isn't natural. This isn't going to end right now. Okay, so could be a problem for us for a bit here. Okay. Now the second amigo we have that is a big problem is Jackson Hole's coming up, okay? The Jackson Hole Economic Symposium. Now, this is a huge deal. It's coming up next week, okay? And people are traumatized because last year, Jerome Powell at Jackson Hole took a very, very extremely hawkish stance on kind of what the Fed was going to be doing moving forward, what was going on with inflation, and everybody is very, very traumatized by what happened last year. And so people are very scared about Jackson Hole Powell. And is he about to come out and just drop the hammer on this market and say, don't even think about us lowering rates. We're not going to be doing that anytime soon. We're probably going higher on rates. We're probably going to be at high rates for a long time, and just throw cold water on any thought process of dropping rates, right? And so that's a fear. It's a true fear in the market right now. They're scared of Jay Powell when he's at Jackson Hole, and they're a little traumatized by that whole situation. So we'll see what happens there. But that is certainly amigo number 2. Amigo number 3 we're dealing with is our fearless stock market leader, which is NVIDIA. NVIDIA is the stock market leader for 2023, right? This is the most important stock in the stock market. It's more important than Apple. It's more important than Microsoft. It's more important than Meta, Tesla, any of them. This is our fearless leader this year, okay? It won't be in future years, but it is this year. Now, their earnings are coming up this upcoming week, okay? Everybody's looking at those. We've been kind of let down by AI so far, and everybody's looking at those and saying, okay, are you actually going to come through with these numbers? Now, my guess is NVIDIA should come through with their numbers. There's so many massive companies that seem to be ordering so many chips from NVIDIA. They should come through with the numbers, and they should come through with another great guidance again. That's my opinion on that. But the fear is, what if it doesn't happen? If we sink NVIDIA in a major way, the whole NASDAQ's going down big. Big. The Qs are going down. All these stocks are going down a whole leg lower. Because that will have put out the fire of AI. Completely at that point in time. It's been the fire's not raging like it was, I can tell you that. It's been kind of put out from all the AI stocks that are kind of disappointed. If NVIDIA comes in and just is a little off on this or that, the whole fire's out. So that's why people are also scared, because they're looking out there and they're saying, oh my gosh. Now, the good news for this is, okay, as of the end of next week, 2 of these will be solved. 2 of these amigos will be solved, and we'll be able to move on, right? Jackson Hole will have happened, and we'll have either gotten to deal with, insane hawk Powell, or maybe somebody that's a little more in the middle ground. He's for sure not going to come out dovish. We do know that, right? So maybe we're dealing with kind of a middle ground Powell. So that could get solved. NVIDIA earnings will get solved, right? So 2 of the amigos are solved. The 30 year is not going to be solved next week. That's going to be something we're going to have to keep an eye on for the next 6 to 12 months, unfortunately. But that's a good thing for us. So if you're thinking about, the market potentially feeling a little better, once we get through those 2 scary things, we could potentially feel a little better, because those are 2 big boogeymen. And, we need to get past those, because that's freaking the market out bad, and we'll continue to into next week. Okay, get your money right. I appreciate y'all joining me as always. Thanks so much for being here, folks. Obviously, I'll keep you up to date on everything going on out there. I will be buying stocks tomorrow. in several different accounts. I will be a buyer. So appreciate everybody joining me as always. If you're looking to apply to join my private group, learn on a much higher level, learn everything I got up here and I've learned over the past 15 years on picking stocks, running portfolios, hedging, all those sorts of things, then check out the pinned comment down there. You can fill out an application. Much love and have a great day.